This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC and its allies struggled again to pump enough oil in August to meet global demand as it recovers from the coronavirus pandemic, potentially adding to upward pressures on oil prices. Several OPEC Plus members such as Nigeria, Angola and Kazakhstan have struggled in recent months to raise output due to years of underinvestment or large maintenance work that has been delayed by the COVID-19 pandemic. Cheating and producing above targets have traditionally been one of OPEC's main problems, but the situation has changed in recent years as investment has flowed into the renewables sector as part of the energy transition.
Britain is considering offering state loans to energy companies that take on customers from firms which go bust due to soaring wholesale natural gas prices, Business Secretary Kwasi Kwarteng said on Tuesday. As economies reopen after COVID-19 lockdowns, wholesale natural gas prices in Europe have soared this year, pushed up by high demand for liquefied natural gas in Asia, nuclear maintenance and lower than usual supplies from Russia. The record prices have strained the British energy sector, destroying the business model of smaller energy traders and sending shockwaves through the chemical and fertilizer markets, leading to a shortage of carbon dioxide.
Moving on to the top news in the energy sector.
Oil prices rose modestly in a seesaw session on Tuesday, as concerns about the global consumption outlook counterbalanced the struggle by big OPEC producers pump enough supply to meet growing demand. Both benchmarks were at one point up by $1 per barrel, but Brent crude paired gains and was up just 32 cents to $74.24 a barrel by 11:49 a.m. Eastern Daylight Saving Time after falling by almost 2% on Monday. The October West Texas Intermediate contract, which expires on Tuesday, rose 16 cents to $70.45 a barrel, after dropping 2.3% in the previous session. The more active November contract rose 27 cents a barrel to $70.41.
A global drive towards electrification of road transport to reduce carbon emissions may cut demand for the world's oil refining capacity by half in 2050, consultancy Rystad Energy says. Going forward, we will be touching by 2050 somewhere very close to 90% of electrification, Mukesh Sahdev, Senior Vice President and Head of Downstream at Rystad Energy said, adding that this scenario would probably lead to a 50% decline in global refining capacity. Electric vehicles will cut global consumption of gasoline and diesel, but demand for other refined oil products in aviation, maritime and petrochemical sectors could remain high because of urbanization, which will pose a challenge to the refining sector, Mukesh said.
Next, we have the top news in metal markets.
An unexpected surge in demand for silicon, mainly from the solar energy industries in China, Europe and the United States, has led to large deficits and fueled a price rally which shows no signs of abating. Silicon prices have climbed to around $4,000 a ton in all three locations, the highest on record, from levels below $2,000 a ton at the start of the fourth quarter last year. Silicon is made from silica or sand, abundant on the Earth's crust. But processing capacity for greenfield developments can take 2 to 3 years once permits and financing are in place. And restarting idled capacity could take 3 to 6 months, likely longer if a plant has been closed for a long time, according to CRU analyst John de Lind.
Widespread closures of magnesium smelters in top producer China due to a clampdown on emissions and shortages of energy have propelled prices of the metal to their highest since 2008, posing another headache for automakers. Magnesium, also widely used in the aerospace industry, is needed to make aluminium alloys for the auto sector, which is already reeling from chip shortages. Prices of the metal in Europe have rallied to their highest in 13 years and could rise further over the next few months, before returning to more normal levels by the end of the first half of 2022, the International Magnesium Association, IMA, said on Monday. We will now look at the top news in the agricultural sector. Ukrainian farms had sown 1.32 million hectares of winter grains for the 2022 harvest as of September 20, or 17% of the expected area of 7.84 million hectares, the Agriculture Ministry said on Tuesday. The area will include 6.68 million hectares of winter wheat, 1.02 million hectares of winter barley and some area of rye, it said. Farmers had sown 1.2 million hectares of winter wheat and 2,500 hectares of winter barley, the ministry said in a statement.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.